Virginia. My name is Sandy Ratliff. I'm with Virginia Community Capital. And if you're not familiar with our organization, we are a community development financial institution. It was created in 2006 to provide lending, investing, and community innovation services in Virginia. Historically, we've been focused on area markets and regions that have been excluded to accessing capital. At this workshop, you're going to hear about some innovative products and services we offer for small businesses and nonprofits across Virginia. This webinar is being recorded for education and training purposes. However, if you have a question, please do not hesitate to post those in our Q&A section, and we will address those as we move forward in the presentation. And also, we will allow time at the end for additional questions. Our presenters today, I'm proud to call these folks colleagues of mine. The first one I want to present is Lauren DeSimone. She's our food financing advisor for Virginia Community Capital. Lauren has quickly become VCC's expert in healthy food access and has been instrumental in our success in acquiring additional funding to support this program. Also joining Lauren is Chandra Hurst. She is our Economic Equity Small Business Loan Officer. And you will see Chandra has a lot of experience in getting capital out there, and we will review all of those offerings that she has available for small business, especially for women and minority-owned businesses. Thank you for joining us today, and I am going to stop sharing, and I am going to turn it over to Chandra. So, Chandra, it's all yours. Thank you.
Okay. Good morning, and I'm not tech savvy and managing the slide and talking at one time. So Lauren, my partner in crime today, is going to be helping me with the slides. So thank you, Lauren. And it's so good to be with you guys this morning. I love the fact that I could be in Southwest Virginia from the comfort of my home. The beauty of this platform has allowed us to do there, but I'm no stranger to that area. I went to school in Nashville, Tennessee, so I've come down 81 several times to get to school. And many moons ago, I'm not going to tell you how old I am. But again, it's great to be with you guys, and thank you so much for the opportunity to share some of the great work that we're doing at VCC. And as Sandy mentioned, VCC has been around since 2006. And just before we get started, I wanted to share our mission and vision and some of the impact that we've had. So our mission is to support housing and community development ventures, increase jobs, and build sustainable communities by offering flexible financial products and advisory service, which we will highlight in on this call today. And our vision is to be your first choice for innovative capital and collaborative leadership, promoting vibrant local communities and enhancing the quality of life. And so we're going to go to the next slide just to give you an idea of the products and services that we have and that Lauren and I will focus on and highlight throughout the presentation. So our three big areas that we focus on is lending, advisory services, and investing. So you're taking advantage of some of the advisory services today as far as business development and technical assistance. And you have practitioners in the area that we work with to do that. And you'll see those numbers on the next slide. And as far as investing, we can go back just a tad. That's all right. We have investing with deposits, grants, stocks of that nature. And then, of course, where we play in the lending arena. So the real estate financing, and we'll give you a snippet of what's to come on that, and affordable housing. A small business is my wheelhouse, and I have some colleagues on the line that are also in that arena. And then healthy food, where Lauren is our resident expert in that arena, and she's going to share some information regarding that. And then also clean energy. So our next slide just kind of gives you a snippet of our impacts since inception. And as Sandy mentioned, we were established in 2006. And since that time, we've had a little over 1.9 billion in total impact. That equates to about 1,450 loans and originations of a little over 800 million. So that is just great work that we've done and getting capital into our community. So that looks like 1,200 projects financed. I love to see this job creation. We know that in order to have sustainable communities, we need people working. Also, we've had housing units financed, 11,000 there. And as I mentioned before, technical assistance, that has been key, especially in the pandemic, helping businesses, particularly BIPOC, and you'll see more of that, and women-owned businesses being able to have the necessary tools and documents needed to even come to the table to ask for money and apply for a loan. So technical assistance, that's a proud moment for VCC to have almost 33,000 hours. You see our clean energy space and health. And then also, I'm going to say 30 food access loans. That is huge because we've just put some emphasis in that space. And with that being said, I'm going to go ahead and turn it over to my partner in crime, Lauren DeSimone, so she can share what we've been doing in that space. Lauren.
Thanks, Chandra. Just going to finish up the bit about VCC with our guiding principles that you see here, and then I'll get into the food program that we have. So as you may know, if you're familiar with VCC, we pride ourselves in following this North Star of partnering with our communities, co-creating solutions, being innovative with capital access, and then always doing our best to provide the expertise to help you navigate, or your communities navigate, capital solutions for their needs. And Chandra covered a little bit of this already, so I'm going to go ahead and skip over that slide, and we're going to get to our Virginia Fresh Food Loan Fund. So I've been with VCC now for almost 5 years, and I've been at the helm of the Virginia Fresh Food Loan Fund since that time. It existed, or it was conceived in 2013, so it's been about 10 years that VCC has offered this revolving loan fund. The mission is to increase healthy food access in communities by providing technical and financial resources. And my job and our job is to make sure that those resources are equitable and accessible by community members. It is a $10 million revolving loan fund. We are across the state of Virginia, urban, rural, north, south, east, west. And the primary investment into our loan funds comes from U.S. Department of Treasury's Healthy Food Financing Initiative, or short HFFI. So some of you may have heard of that or are familiar with that. But we've received now 6 awards, I think almost totaling $7 million, that enables us to further leverage that with our own capital. And that award allows us to have lending capital available. That lending capital comes to us at a very low interest rate. So it allows us to reduce interest rates, sometimes below market, for financing food projects. And then it also provides us resources for technical assistance. And you'll hear a little bit more about that. I'll have some examples to share with you. I will also say, speaking to our history, that primarily until the last few years, VCC was mostly working in financing the healthy food retail, healthy access, food access space, which is more on the end of the value chain of the food system. So if you're thinking about starting with where food is grown in the field, agriculture production, ranching, et cetera, and then you think about the supply chain infrastructure, and then you think about how to get food into the grocery bags and then the homes and the bodies of our Virginians. We've been focusing mostly on that food access end, where we work with grocery stores, healthy corner stores, farmers markets, food retailers, et cetera. And we've since been expanding our portfolio to work more in the supply chain infrastructure. So you might hear food hubs, aggregation, distribution, and that's a really lucrative space to be in, and one that's necessary if you're considering the entire food system. All these pieces do work together and support each other. So that's something that we're expanding, and would love to talk with you more about that. That's not to say that we've stopped our financing in the food access, food retail space, but we're just expanding our portfolio. I'll also share that VCC to date, or at least in our food program, has been an active participant in the Virginia Food Access Coalition. If some of you have been around the food space for a while, you may have remembered the Grocery Investment Fund 6-7 years ago. So that was newly named the Virginia Food Access Coalition, and that coalition successfully passed a bill in 2020 called the Virginia Food Access Investment Fund, VFAIF for short, that some of you might be familiar with. And that provides up to $50,000 grants to food retail businesses in Virginia. And there are some other requisites that are associated with that. But VCC became the contracted CDFI to support this program, and we've been doing it every year since in providing technical assistance, not only to those awardees that receive grants, but also to the applicants. Some projects that are submitted as a competitive project might not quite be ready to receive that VFAFE award. And so there might be some opportunities for technical assistance, connecting those business owners to other resources, especially locally in their own community, to help increase their development of projects so that they might be eligible in the next year. And VCC really sees the VFAFE grant as one piece of that pre-development puzzle and a catalytic grant that helps to kind of jumpstart the activity of a project. And then hopefully that project comes to fruition, that business is veritable, has financial needs that are beyond that catalytic grant. And then VCC or other financial institutions can step in and provide that support. So just want to make sure you are familiar with that VFAFE program. And then more recently, we're not quite like blasting it from the mountaintops, but we are able to say that we have become, just in the last couple, I would say week or two, a key partner with the USDA Regional Food Business Centers. They were, it was a competitive application process, and about 3 weeks ago, USDA announced the 12 centers across the country, and there's a Southeast center. There's also an Appalachian center that some of you may already be familiar with, and there's a Northeast center that's kind of surrounding Virginia. And we'll be the key partner CDFI with the Southeast center. All that to be said, we're responsible for helping with the fiscal management of it's a tens of millions of dollar award to deploy up to $100,000 in catalytic grants and technical assistance to food and farm businesses. So stay tuned. That's my trailer preview for you. More to come. That's a 5-year agreement. So there will be lots more that you'll hear from us about that. But I just wanted to share and make that known so that as you are maybe interacting with or interfacing with food and farm businesses, and that includes ranchers, that there will be additional resources that are significant down the pike. I forget what we talked. I'm seeing some chat and questions. I'm not sure if I should pause or if I'm supposed to wait for the end.
Lauren, you can certainly address them as we're going through, if you'd like.
I just can't see that. If I wasn't sure.
One of the questions is from Margie Douglas. If a business wants to apply for the funding, when should they start working with VCC?
For financing?
Yes.
I think that's a great Chandra question. I can certainly answer that, but I believe Chandra's slide towards the end of our slide deck will have specifics around that. So I'm going to save that till the end. Is that okay?
Yes. And you'll both have your contact information at the end of this, and we'll be sending out a follow-up email too that you'll have it. Thanks.
And we have one more question for you in the chat. And this is from William Baldwin in Grayson County. He says he's up to a little more than 200 heads a week of hydroponic lettuce production that's currently in his basement. And he would like to grow more, but he's out of space and needs to expand into a greenhouse. Is an expansion like this something that I could work with VCC on?
Absolutely. Absolutely. Yeah. So as I said, you'll hear more about the food specific resources that VCC provides in my slides. And then Chandra will dive more into more of the general small business with the focus on our economic equity fund. But either way, I think by the end of the slide deck, you'll have an idea of who you want to talk to and when might be appropriate. And either way, our information, like Sandy said, are on those slides for you to reach out to. But that's absolutely an example of a project. In fact, we are working on one now, and Cindy, maybe you have a chance to jump in at the end. That's in Southwest Virginia. It's hydroponic for sure. So I'm going to just paint a picture more about the ecosystem that ensures that financed projects, grant funded projects are successful, and how VCC thinks about our role in that. So our development strategies for the food system, and again, this is the entire value chain of the food system now, not only the food access, thinks about making sure that our North Star is making sure that our resources are equitable and accessible. So we are doing our best to fundraise and find low interest capital, 0% interest capital that we can blend to provide low rate financing. And then we also, and this is a lot of the work I do with our investor relations colleagues, is to find other creative credit enhancements or capital tools that serve as credit enhancements. And that could look like patient capital that kind of eases up some of the burden of loan repayment on the borrower. So maybe they have more flexibility with their cash flow and they can figure out when they can start to repay a loan. It's not quite the conventional term. Also, loan loss reserve is a significant tool that we use, which essentially mitigates risk. And you're going to see some of those ways that these capital tools are used in financing structures. We also provide technical assistance, and that can be business-based, like general business, financial literacy, business development needs. Maybe it's working with an XBDC. We often work closely with XBDC reps. It might be an industry-specific technical assistance need. So that might be, like you see here, feasibility studies for, I forget your name, sir, but your hydroponic expansion interest. Like maybe it's a feasibility study to look at where's the best, building or facility to house your expanded production. We've also been working with some independent grocery stores who are forced by EPA changes and greenhouse gas reduction to upgrade all of their cold storage, refrigeration, freezer systems. And that's all in the interest of being more energy, producing energy savings. So we could be involved with that. And then of course, catalytic grants. We provide in-kind technical assistance. So like one-to-one conversations, meetings, having chances to review information that are shared with us. We also do have a provision where we can actually grant technical assistance dollars to a third-party vendor. It's usually used when there is a technical assistance need that is much more, has depth and an expertise that we might not have. That might be a market demand study, or like I was saying, an energy audit where we bring in an energy company. So just know that technical assistance can be a little bit variable and is responsive to the needs of what the project has. We also then provide and link other financial and technical resource needs, such as the Virginia Food Access Investment Fund. My role, I often joke, is less about, I'm not a lender, less about anything other than being an air traffic controller for connecting. You have a financial need, here's a financial resource. I always say it's not about a lack of the funding out there, it's about a lack of knowing how to navigate the funding, get it, and then the timing of it. Because especially if we're looking at grants, you could have a really large grant available, but that might not be due until another 8 months, and then you might not get that actual dollar for another several months after that. So in terms of thinking about what your project timeline is and what your capital stack, or rather the different funding sources need to be, which include financing, I help to kind of paint that picture or runway to make sure that you have access to the capital, or business owners have access to the capital when they need it. And then, as I've continued to say, none of this is without acknowledging that this is a food system, and that's called a system for a reason. So not only is there the value chain of the food system with all the different assets within that, such as production, supply chain, retail, but also the system of support for a business. And we think about that in that sense as a local food economy. So how are we circulating local food and local dollars? How are we ensuring that we're building sustainable wealth generating businesses, and that there are resources there to jumpstart or initiate that business or sustain it throughout its growth life cycles? And if it's not VCC, that's okay. It might be a community bank or a local, other institution. That's fine. We do provide that food system expertise and are happy to connect with wherever the best fit is. But we do and can offer and will offer, even if it's not landing at VCC, how to think about navigating those resources within the food system. And then, as I mentioned, we are an active participant as an educator and an advocate for several policies, both federal and state, and even local, because I've supported some food policy council strategies to ensure that, again, the policies are not barriers for making, for ensuring that businesses can access the capital that they need. So here's what it looks like in the order of how I think about supporting a business. We often start with pre-development need, and this might be an existing business, such as your hydroponic in your basement growth that needs to expand. So whether it's expansion, it's opening another location, or it's truly starting up a new business, we always think about what that pre-development technical assistance need is. How is the ecosystem supporting that? How is VCC or other local stakeholders supporting that need? And then often we do, especially if it's related to food retail, we do very much in terms of equitable access to capital and thinking about the impact of financial investment into a business, consider the greater community. And especially if it's related to a grocery store, there's often a chance for a business owner or an operator or developer to have a really great idea about solving for food insecurity by putting in a grocery store somewhere where there hasn't been one for years and thinking that that's a celebration and that's welcomed by those community members. And then we've seen this time and time again when there's no one that comes. Maybe the grocery store is built, but they do not come. And so there is a lot of national best practice that we do align with that really values and elevates community voice and community ownership. It's called equitable food-oriented development. But that's something that we've seen is not a nice to have. It's imperative for the success of businesses so that you do have a loyal customer base, and that there is responsiveness to those community needs. And we're happy to work with you to bridge those gaps and thinking about what that means for how you plan a business out. We also, like I've said, look to next then catalytic grants. So I always say I try to exhaust all the free money first. Let's find the free money, and then we'll look to the financing as that like last mile bridge. So we're going to look for any local, state, federal grants that are in line with what the business or the product need is. And then we start to look at the financing. And again, how we're a little different from other institutions, and maybe you are familiar with CDFIs, maybe you're not, but we're able to blend different funding sources to make our capital a little bit more lucrative. So it's a lower rate capital. There might be some other credit enhancement tools like I've talked about, but all of that is to make our capital more accessible. So we might be able to offset risk by injecting a little bit more loan loss reserve, which also then enables the borrower to have to pay less in equity to get a loan secured. We can up to 100% at times mitigate the risk of a project based on what capital tools we have available. That just makes all of the work that we're doing, the negotiation, the dance of what does the business need? What's the community impact? What's the financial or other, funding resource availability? We work a little bit deeper and longer to figure out the best scenario for the business owner. And that extends also to often economic development authorities, nonprofit organizations, foundations. This, again, is very innovative in terms of how we make a project work. And 100% of the time, or 100% of the projects that I've worked with all have diverse capital stacks. So there's not been one source of funding. It's not just been financing. It's not just been equity. They're almost always are grants. And that's the work that we're doing, is how to find the dollars and the timing to make sure they're all available in a capital stack that secures that loan. And then really, this is all to get to the point of like, let's break ground, let's open the doors, let's get the business going, let's expand. But then what, right? It does require also looking ahead to the sustainability of that business. And that's something that VCC prides ourselves on, is being there, having that relationship, checking in, being open and listening to the needs post financing or during a term, so that even if that financing came through 3 years ago, but you're encountering some obstacles or needs now, that's okay. Let's talk about it and let's find some solutions for you. What this looks like in real life is an example of a food ecosystem. And this is in Norfolk, Virginia. But I just wanted to illuminate or demonstrate the previous slide, those different steps, and the sake of painting a bit of a story. So St. Paul's Community Development Corporation represents a community in Norfolk that lost a grocery store right at the start of COVID, the pandemic lockdown. And they engaged VCC to do a lot of pre-development technical assistance to think about how are we going to move food. Not only did we lose a grocery store, but the grocery stores that are out there have no products because of the supply chain disruption. What do we do? So they were working with food banks and food pantries and trying to figure out a solution. that was probably about a year of talking to VCC about different solutions, options, talking to the city, looking at other federal grants, et cetera. They eventually were able to, so then separately is Youth Earn and Learn, which is an independent organization separate from St. Paul's Community Development Corporation, that its premise is to hire youth and family members of youth to sell healthy food, especially to seniors or in communities and neighborhoods that don't have access to healthy food. So they were actively involved and present in the St. Paul's neighborhood because of that grocery store vacating. So this organization had been coming in and was selling food. And really the idea was, again, showing workforce development skills, the training opportunities for these youth and their adult family members, really understanding about what entrepreneurship means and really thinking about wealth building opportunities. So the two of these individual organizations ended up applying for a Virginia Food Access Investment Fund, VFAIF grant. And I didn't mention, but that's at the Department of Agriculture and Consumer Services, VDAC. So both of these organizations were awarded a catalytic VFAIF grant. St. Paul's Community Development Corporation applied to essentially create a healthy corner store, to put in more cold storage, to be able to have more fresh produce, frozen, protein, some dairy, to increase those selections in the neighborhood in lieu of that grocery store being there. The Youth Earn and Learn organization applied to continue to expand their programming. And essentially the two of these organizations actually, because they were in the same community, partnered, and they were actually able to create a food pharmacy program that enabled a few different senior housing residences to be brought food for part of their food pharmacy or produce RX program. And if you're not familiar, that's doctors actually prescribing healthy food as a mitigant to chronic disease like diabetes. And this produce RX or food pharmacy program was the result of combining these two $50,000 awards and doing more with that. And the next part of that is that the market that was a part of the Community Development Corporation's application, their project to expand the cold and frozen storage solutions there so that they could increase healthy inventory. That market actually served as the hub, the aggregation center for this Produce RX program. So the market not only was serving, increasing inventory to serve its customers, but also serving as almost like a food storage, food hub base, so that these food pharmacy boxes could be assembled of the fresh and healthy produce and protein and then distributed to these senior housing facilities. The Park Avenue Market actually then decided to come to VCC and actually received a loan was financed to actually expand into a second storefront location to have even more cold storage and frozen storage to get into wholesale selling. So they were able to sell to other stores, other restaurants, et cetera. And one of the requisites of the VFAIF program to receive a grant is offering Virginia Fresh Match and also accepting SNAP EBT. Virginia Fresh Match, as you maybe know, doubles the bucks. So if you are paying $1 to get a banana, you actually can get 2 bananas for that $1, or it's half off, however you want to see it. So on the left here are the capital sources. I told you that 100% of the projects I've worked with have different capital sources. So this is VCC financing, it's a state ag department, VDAC's catalytic grant. There's Virginia Fresh Match, actual reimbursement dollars being given to these businesses. And then all of this money unlocked several other foundation and other funding resources from the city of Norfolk. I think 3 foundations came in and gave money to continue to develop this food ecosystem. So I know that was long-winded, but it's complex, right? If it were easy, we'd all be doing it. We wouldn't have these problems. So it does require a bit of understanding how all the pieces fit together. But I hope that was a way that wasn't quite a detour to help you understand that. And I just have some photos and a few different examples of this work to finish off my slide. So this is in fact in Norfolk. So this first picture is the group, just as the Super Value in Norfolk left right before COVID, or just as COVID was locked down, you see all the masks distributing the food, working with the food pantries. On the right is Park Avenue Market. This actually is 2 different storefronts after the financing from VCC enabled this market to not only expand in one and add a few coolers and freezers, but actually open a whole new second location next door. On the left here is the Youth Earn and Learn, selling their healthy food at a pop-up market. And on the right here is, it's maybe hard to tell, but it's actually the promotion at like a health clinic of the food pharmacy program. And here's that symbol that maybe, if you remember on the previous slide, represents this partnership between the 2 organizations. You'll see, I think, a Bon Secours mobile health clinic van in the back. And then this is the St. Paul's Community Development Corporation logo there. So just a really beautiful way of thinking about how all the system pieces fit together to increase healthy food access. Another example that we've worked with is a technical assistance grant. So I mentioned we provide in-kind technical assistance, but can actually also grant dollars. So this is an example where a food hub wanted to pay for or needed a feasibility study to expand potentially their location because they had maxed out their space, and they had reached out to talk about what that could look like. And we were able to, this has happened a few different times, but we were able to look at our technical assistance pot and say, yep, we can go ahead and offer you a technical assistance grant, which means that we're paying that third-party vendor to complete the feasibility study. But we actually were already in talks with a regional foundation who wanted to support the food hub. So we were talking to the foundation and we decided that we could go further together. If we were to put in a match, the foundation put in a match, and then we required 20% from the food hub applicant to pay for that feasibility study. And we also, as part of our technical assistance along the way, helped the food hub think about how to fundraise essentially and create a pitch deck to ask that foundation for a match. This is an example of Donia Fair in Harrisonburg. This is an example of the VFAIF awardee. So this is an award that went to funding a new cooler and to repair an existing cooler. It's a small store, quite walkable to a large Latinx community. And as a result of that award, the inventory for fresh produce and fruit and vegetables, dairy, protein was able to be expanded. And Sarah Santa Cruz, our colleague here, was the program director at the time of VFAIF and actually traveled to the store to help the applicants write the grant literally and assisted with language translation. That's a pretty big lift, but that is another example of understanding the barriers to accessing capital and what needs to go into ensuring that those barriers are removed. This is an example of a rural grocery store. I had referenced it earlier. This grocery store needed to improve their energy efficiency with their cold storage and their frozen storage system. So not just buying a new cooler, but actually like going into the back of the store and totally wiping out the room that's there and replacing it with modern equipment. This is like a 30, 40-year-old, 40-year owned store by this family. So that system is quite old and not efficient. So VCC was able to support new equipment. I think somewhere in there was also mortgage refinancing, but I just wanted to point out, you'll see the capital stack list. They were awarded a VFAIF grant. They had a SBA 504 loan, they had a VCC equipment loan. We did refinance with a commercial real estate loan. And then they also were able to then be awarded fresh match reimbursement dollars for selling SNAP eligible produce. And one area where we were able to use a credit enhancement is our loan loss reserve that we have as part of our Virginia Fresh Food Loan Fund enabled us to allow for 100% on the new equipment rather than the 75 that's a standard for VCC. So we're able to inject the loan loss reserve to help support bridging that gap that would be normally a 25% gap. And then we're beginning to get more into advising and consulting. So this is an example of a community advised food fund that is within partnership of a community foundation. So this is this is more of an urban area, but this is an example of philanthropic dollars, thinking about impact investing, place-based impact investing, understanding that they have a vehicle and an agency to support the inception of hopefully a sustainable fund that would benefit small food and farm businesses in the city, and have brought in VCC both from our food systems financial advising space or expertise, as well as then our partners. Some of you may know them, formerly Locust, but Local Impact Strategies, to advise impact investing models for bridging the community foundation and other potential investors in that community, and how to model this fund that would attract additional investment, grow it, and then deploy it in a very sustainable way. So this is an active engagement. We're helping to design the stakeholder engagement to understand the role of impact investing. All of the end goal is wealth building opportunities that we're going to generate, and really bolstering the local food economy by that. We're talking about what does the fund design need to be so that it's sustainable? What's the governance structure for making decisions about allocating those funds? And then how are we developing a sustainability plan to extend the longevity of that fund beyond the contract that we might have? How much do we need to raise? Who other investors do we need to engage? How are we ensuring that we're matching the investor availability or capital supply with understanding what the demand is, what the capital needs are? So that's another example of a way that VCC can bring several different facets of what we offer to the table. And again, it's a little bit different than financing, but I believe this is a direction that will be a new path for us, and in addition to the financing that we provide and all the technical assistance that we provide. But I think that's it for me.
Awesome. Do we want to entertain any specific questions for Lauren at this time with regards to the information she presented? All right. And Sandy, do you guys see any hand raised or anything in the chat?
No, I looked, but
Okay.
please,
Awesome.
if you've got questions, speak now or forever hold your peace before this is over with.
Well, you can see Lauren is working extremely hard to bring forth innovative solutions for individuals in that space. And I too have been a beneficiary of Lauren. I serve on the American Heart Association board, and they are one of the partners that Lauren works with in the Virginia Food Access Fund, and also Partner RX. So we advocate, and I've been at the General Assembly trying to get legislators to buy into what we're doing. So the work that we do transcends just VCC in those particular markets, but it's legislative and all that, all involved. So thank you, Lauren, for what you do. And I've learned a lot in this space. And I've been with VCC since September of 2021, spent years in banking. I'm not going to tell you how many, because then you'll know how old I am. But by far, VCC has been a very rewarding place to be and work. And ironically enough, when we first launched our VC, the Economic Equity Loan Fund, that was birthed out of our response to the pandemic. We found that people of color, with BIPOC, Black, Indigenous people of color, and women-owned businesses were disproportionately affected by the economic impact of COVID. So that's where VCC's response was to establish the Economic Equity Loan Fund. A little bit of irony here. I was at Wells Fargo as a community development officer and worked with our CDFIs. We had a Open for Business fund where we were granting CDFIs monies specifically in this space to help BIPOC and women-owned businesses. So I was on the review team where we were awarding CDFIs this money. Of course, VCC was a client of mine at Wells Fargo here in Richmond, so I couldn't do that. But my position got eliminated. So now I'm deploying the money that Wells Fargo gave them to give money to BIPOC individuals and women-owned businesses. So it's pretty much a full round circle of the impact that we have, and an example of how VCC goes to market to get grants, et cetera, to give monies to these particular individuals. So Enough said about that. Just to give you some idea of eligibility for the Economic Equity Loan Fund, of course, it is available to BIPOC, Black, Indigenous, people of color, and women-owned businesses, with at least 50% women-owned and BIPOC, right? So loan sizes range from 50,000 to $1 million in this particular fund. However, VCC can lend up to $13,000 to any, well, 13 million, I should say, to any entity. But for the purpose of the Economic Equity Loan Fund, that is from 50,000 to $1 million. And generally, the businesses should be business owners that cannot secure financing with other financial institutions. As far as eligibility of purpose of loans, you can see it ranges from a myriad of loan opportunities for the businesses to help them grow, sustain, and hire new employees and things like that. So you're looking at owner-occupied real estate, expanding the business, leasehold improvements, business startup costs associated, working capital, equipment, just refinancing some personal debt that they use for the business, or even refinancing high-cost debt for the business. We like to see businesses located in the state of Virginia. However, we may consider some contiguous states. Depending on some of the grant requirements, will determine whether we have to stay in the state of Virginia or we can go outside the state. And we generally like businesses that have been in existence for 18 months or longer. In some cases, we may consider a startup, but there have to be a case-by-case situation for those. And as typically, we may see someone who's been in the industry for years, continue to receive income from their job, have that secondary source for income, but want to start a new business in a similar industry. In some of those cases, we may consider a startup, but for the most part, we like to see businesses for 18 months or more. How the Economic Equity Loan Fund differentiates from traditional banking and VCC as a whole, as we can use loan loss reserve that Lauren mentioned in the places where there are mitigating risk and or the borrower just doesn't have the capital to inject into the project. And we're going to see some examples in just a second about that. Also, the Economic Equity Loan Fund allows us to look at credit situations and actually consider, we do consider the score, but we want to see what situations led to maybe a hiccup in credit. So we typically would look at a score of 650, but if it's below that, we want to see, well, what were the situations that got you to that position? Were there any derogatories in the last 12 months? So we look at credit history and lower score, but again, 650 is kind of where we want to play. And if there's no derogatory for the last 12 months, no bankruptcies within the last 5 years, those are some of the things that we look for when we're considering this program. We can go to the next slide because I wanted to give you an idea of collateral, which will lead into the conversation of loan loss reserve. So historically, you see collateral valuation, meaning that a bank typically or financial institution would typically not lend 100% of financing, and which means that the borrower would have to bring capital or inject equity into the project for us to finance. Two that I'm going to mention, and you'll see examples of how VCC's Economic Equity Loan Fund and Loan Loss Reserve were able to make access to capital available to these two examples, I should say. So as far as used equipment, we're looking at 50%. That's a hefty injection from a borrower. And then CRE is commercial real estate. We're looking at anywhere from 75% to 85% that we will finance. And you can see the others, but I did want to kind of put a pin in that so you can look at the next two examples on how we injected loan loss reserve into these projects to make it available for the client. So Lauren, we can go ahead and move to the next slide. So in this particular situation, I had a borrower that wanted to expand his business and purchase 2 additional dump trucks. And so the dump trucks were going to be $270,000. And you can see without loan loss reserve, remember on the prior screen for used equipment, 50% loan to value. So he would have had to come to the table with $135,000 for us to finance this project for him. As a result of him being BIPOC, right, and having access to our loan loss reserve, we were able to inject, he was only had to bring $27,000 to the table, which is 10%. And we were able to provide loan loss reserve of 40%. That doesn't mean we actually gave the $108,000 to him. That money is just set aside in a reserve fund, again, like Lauren mentioned, with, if you know, to mitigate risk. So he was still responsible for a loan of $243,000. However, if not having the advantage of the loan loss reserve, he pretty much would have had to pay for one of the trucks out of pocket. So the two trucks were $135,000 each. So this was a great example of how we were able to inject loan loss reserve into a situation for someone who met the criteria on that economic equity loan fund. Another example in our next slide is I had a client who was leasing a daycare facility. So we can go to the next slide, Lauren. They were leasing a daycare facility and had the opportunity to purchase the real estate. So again, in the prior slide in collateral, historically, you would have to bring either 25% to the table to finance this particular project. So without the loan loss reserve, they would have had to bring $48,750 to the table. However, with loan loss reserve, they were only responsible for 10%, which meant that they only had to bring $19,500. But again, they had other ancillary costs like appraisals and things of that nature. But this allowed them to bring less to the table in order to acquire the building. So the loan amount was $175,500. So these are just a few examples of how coupling economic equity, loan loss reserve, and other enhancements that we have developed specifically for BIPOC and women-owned business owners to provide them access to capital. And we can go to the next slide because you're probably thinking, well, these are great. How can I get access to this money? And I think, William, you asked, well, what do I need for a loan package? So just to give you an idea of what we like to see when you come to VCC. Because we have so many resources as far as technical assistance, if you don't have that all wrapped up in a bow, you can still come to us because we can provide you with resources like Lauren mentioned, even grant writing assistance, projection writing assistance. But typically, this is what we'll need when you want to present a loan package for us to move on. We want a specific breakdown in uses, sources and uses of funds. And I say that because so often I'll get a call and someone says, I need a line of credit. So I'll say, well, tell me what you need the money for. Well, I need to buy a truck. Well, a line of credit is not really what you use to buy a truck. That's fixed financing, what you saw in the example earlier. That is a fixed period of time, fixed payoff. That's a loan. That's a fixed loan. Whereas a line of credit is more designed for working capital. So in that discussion, when you provide us with the sources and uses of the loan, we can tailor the loan solution to meet the loan need. We also want to see 3 years of business tax returns. And of course, if you hadn't been in business for 3 years, the most recent. In the event that you haven't had your 2022s prepared yet, we're going to want year-end financials as well as your interim financial statements, which is that third bullet. We want to look at your accounts receivables and account aging if appropriate for your business. In addition to your balance sheets and income statements. And sometimes we refer income statements to P&Ls, profit and loss. We like to see 2 to 3, I'll update that slide, 2 to 3 years of projections. And what we're looking for is month to month and annually what those projections look like. And we want those projections to be realistic to support the loan, right? So we want to make sure that if you're looking to, in this particular case, when my borrower was looking to purchase 2 additional dump trucks, well, we want to see what your revenues are going to be as a result of the purchase of the 2 dump trucks and your added expenses as it relates to that. So we can know, will you have the cash flow and the resources to pay the loan? Buy-sell agreement if you're purchasing or acquiring a business. The letter of intent if you're looking to purchase a building or leasing space. Personal financial statement for the guarantor. That's going to be critical because as we saw an example, the borrower will have to inject some capital into the project. So the personal financial statement will allow us to see where your cash is, your liquidity, where it is. If you're going to be leveraging your home as collateral, that just gives us an idea of your assets and liabilities from the guarantor perspective to know if you have the capital injected to the project. And of course, we'll need your personal financial statements as a guarantor. We'll need authorization to pull credit, and we'll also need a business plan. And I know this is for new businesses, but we also need it for existing businesses that may be launching a new product line or and things of that nature, or expanding their business to additional services. So we would always like to see a business plan or an executive summary. And also in some cases, we want to see your resume to see what is your professional experience that we know that we can take a risk, especially if we're utilizing other enhancements and things of that nature when the business may not be as profitable, or there may be some the lack of guarantor, the strength of the guarantor. So all of those things help us determine your readiness and if we can move forward to determine if we can actually extend the loan to you. So at this time, I'm going to open it up for questions before we put our information on the screen. So does anyone have any questions with regards to the Economic Equity Loan Fund? Any questions regarding food access that Lauren spoke of, or any general questions? Because we do have some other lenders on the line if you had a question outside of economic equity as well.
Chandra, I don't see anything right now, but
Okay.
I have a question that may
Okay.
help the others. We've got a number of partners that are on this call with us that work with small business and so forth, as well as small businesses in Virginia. How long does it typically take to approve an application from the day it was submitted until you were approved and here's the money?
Yeah, so if we have all documentation in place, and so often what I see and what I've seen more of is clients will come and they're not quite ready yet. So that means they may not have their projections, they may not have their business plan firmed up. So that may take a little while for them to get them. But once we have all documentation in place, we typically can get that into our underwriters within a week, and probably within a week to 2 weeks, we can have an answer, right? But depending on from start to finish, if it's real estate involved, of course, appraisals are needed and things of that nature. So non-real estate loans, probably 2 to 3 weeks with decision and additional questions along the way. If it's real estate contingent, depending on how long that appraisal is going to take, that can take 60 days. But we try, like I said, the clock starts when all pertinent documentation is in place for us to get started.
Great. And like everything, the better you're prepared, the faster and easier the process is going to be. And
absolutely.
One of the things that both you and Lauren both do is offer technical assistance to help them, you need to add this, and they share some of the issues that they've had in the past with other loans. So that's great to know. Now, is there a cutoff of how small of a loan that can be offered?
Like I mentioned, 50,000 is the minimum and 100 for the Economic Equity Loan Fund. However, to get the benefit of the economic equity, we can, like I mentioned, do up to 13 million per entity. So, but it just wouldn't get the benefit of economic equity above the million.
Great. Mm-hmm. And Lauren, can you talk about just quickly kind of the TA that you do offer?
Sure. I'm trying not to go into a long-winded spiel again, but I mean, really, it's. So there was a question about like, when is someone ready to talk to VCC? I usually say I want to see first a business plan and then a sources and uses document completed. And I'm able to refer a project or a business owner to SBDC or other more generic small business development assistance. But with regard to the sources and uses, I have a template that I share, and I often walk through the template, which, if you all are familiar, outlines potential sources of funding and then what the uses are, because especially with grants, a lot of the grants are restricted to very specific eligible expenses. And based on that sources and uses, that also helps me know what the potential borrower or the business owner has looked for at USDA or at a state level or hasn't. And then I can then offer or suggest those funding sources. And then we look at the financing at the end of what's needed to close that gap. So that's where I start. And then, I mean, it's definitely ranged. Often I would say the biggest, the most, what would be the word, majority of the technical assistance that I offer is a lot of just, hey, I have this specific need. It's kind of nuanced. Do you know who else has done this? Or, if it's an estimate for building a community center that mixes agriculture and housing, who has done that? And we need to also understand the maintenance expenses to build out a performer. Like, I can call so-and-so from a different part of the state because I've known what they're doing and offer them as a resource. So that's what I would say the majority of my technical assistance is everyone's done it before somewhere. Let's find that person and make sure that you're not recreating the wheel.
Great. I don't see any other questions, but first I want to thank you both for sharing your expertise and for your time this morning. I will remind you that we are going to be sharing the slide deck with you later today, as well as, since this is being recorded, we'll also include a copy of the link that you can use, and not only for yourself, but if you found value in today's workshop, please share with others, either within your network or for your small business owners. That's the only way we can win at this, is the more that we can share and help our business community in Virginia. That's what our objective is. I do want to, Lauren, Sandra, one of the other programs that our plans are in the late summer, early fall to do another session, and Virginia Community Capital does have an affordable housing program that Ernie Maddie leads. Do y'all want to just take a second to mention that?
Sure. Get the slides up in just a second.
It's okay.
So as Sandy mentioned, to come is VCC's Affordable Housing Loan Fund that supports development of multifamily affordable housing in the Richmond region, and the loans in construction, acquisition, redevelopment costs, et cetera. And Ernie, who is our resident expert in that arena, will be presenting you guys with that information here shortly in our next series. But we're going to just provide you with Ernie's information. So in the event you have a project that you're working on and you wanted to learn more about what we do in that space, here's the contact information for Ernie. And hopefully you found some good information today. And if you have a project that you're working on, Ernie will be available to entertain questions as it relates to affordable housing projects.
Great. Question from Amy: will the Affordable Housing Fund expand outside of the Richmond area?
My experience is that we can't look at contiguous states, but again, that will be a great question for Ernie. Again, some of our funders that provide us with those grant dollars may have specifications that it has to be in a certain geographical area, but Ernie would be the best person to answer that question for you.
Yeah, I agree. There's his contact information, and I'll be happy to share in the follow-up email to you later today. Thanks again. I don't see any other questions. I do want to just put a plug that to let you know that also Virginia Community Capital is getting ready to launch through a partnership with the Washington County Chamber of Commerce, the Virginia Highlands Small Business Incubator, and the town of Abington to host a series of Grow with Google new knowledge sessions that start in July and go through December every other Wednesday. And it will be focused on various products and services and tools that are free, the majority through Google. And I don't know about you, but I always like to see what's available for our small business community. So again, thank you for coming. And I hope that this has helped you and that you'll see that we are a partner and we want to help you through your economic and your business development. So thanks again, everybody.
Thank you.
You have a great day.
Bye-bye.
Bye-bye.